getting a little bit stronger here. You're looking at the Dow Jones Industrial Average up 52 points. Remember, the S&P and Dow both coming into today at record highs from Wednesday's close, rather. And Donald Trump, well, the Trump rally, of course, still going very strong. We've got market watcher Jeff Sica with us. And Jeff, this rally it's about anticipation of future growth, and of course now a lot of anticipation for Dow 20,000.
Oh yeah, of course the conversation about that Dow 20,000, Dow 19,000. You know what we're dealing with right now is I am completely sold on the fact that if Trump is able to execute on his plan, it will be very pro-business, it'll be pro-economy. But here's the one thing that we have to realize is you have a stock market and you have an economy. And the stock market very often runs well ahead of the economy. I think
what happened to the days when the stock market was a harbinger for the economy? In other words, the stock market told us where the economy would be 6 months out, 12 months out. You're not buying that anymore?
Well, I long for those days, but the reality of it is now is that we have a central bank that has taken control, has artificially suppressed interest rates to keep borrowing costs low, to keep companies buying their shares back, and keep the market moving up. The problem I have with this is that when you have these types of euphoric rallies where everybody's acting like moths to flames, running into the market, it breeds complacency, and we're in a point of complacency. Trump's policies, as I said, are going to be long-term good for the economy, but they shouldn't be used to just as a justification.
Speaking of euphoria, and real quick, the great bond rotation been promised for 5 or 6 years. It's starting to happen. A lot of money coming out of bonds, and this is smart money, institutional money, not necessarily individual investors who are exuberant over Donald Trump. Do you give any credence to the fact that they're going to find a new home in stocks for the most part?
They are, but here's what I believe is going to happen. This was the goal all along, to starve investors out of the bond market, pushing them into the stock market. I absolutely understand that that's happened, and it will continue to happen. The problem I have with that is you have a lot of these bond investors who are not accustomed to the type of volatility you see in the stock market that are now in the stock market trying to get dividends, and eventually we're going to have to deal with volatility, and volatility is not always easy for the bond investors to deal with.
Gotcha. Okay. Hey, back to politics and president.